Recently, in her monthly In the Know report, CEO and CIO of ARK Invest Cathie Wood shared her thoughts on the current economy, the growth of M2, crypto, and most notably, the recent bank failures. Cathie compared it to the crisis that occurred in 1994 when Orange County went broke. She believes that the failure of Silvergate Bank and Silicon Valley Bank is a sign that the Fed has gone too far. She acknowledges that these banks had a concentration of crypto and venture-related customers, but argues that the crisis was triggered by deposit outflows, which were caused by risk aversion and a lack of returns on deposits. Money is fleeing to money market funds, which is not necessarily presenting major problems for the big money center banks, but it is definitely causing issues for smaller banks. Let's listen to Cathie.
The leading indicators of inflation are pointing down to deflation, actually. And this idea that we should be using employment, I understand its mandate is to encourage full employment. And we think low inflation is consistent with full employment. But we don't like this idea that because employment's going up, that's a bad thing, it's inflationary. That's the Phillips curve view of the world, which I've discussed on this webinar a few times in the past, but basically it says if employment and output are moving up, then the risk is that inflation will move up as well. The history of the last 40 years, on balance, suggests that is just false. We had inflation and interest rates coming down pretty consistently from the early 1980s until 2020, so 40 years. And during that time, some of the strongest economies with the best employment gains and output gains were in periods when inflation was coming down. And the link there is that when you have strong output growth, you tend to have strong productivity growth as well. And productivity, so output per man hour, enables companies to actually pay higher wages without increasing their prices, or they can increase their margins without increasing their prices. Now, very recently, companies have been doing the opposite. Companies, even like P&G, have been relying on pricing to maintain margins. Why is that? Well, as prices went up, the consumer started pulling back. P&G's volume growth in the fourth quarter was down 6%. That's crazy. That's very unusual for a staples company as well. So basically the consumer is saying no mas. And I think while many at the Fed and elsewhere think that these higher prices are going to be perpetuated, and we'll get into the wage structure. I think we're seeing quite the opposite. If volumes continue to be hit because the consumers are saying, no, I'm not going to be buying that anymore, well, the hit is going to be to margins. So I think monetary policy narratives have to change a bit here. And they haven't yet. Chairman Powell was out this week in front of Congress, both houses of Congress, sounding very hawkish. Why? Because some of the economic indicators that have come out recently look strong, including initial unemployment insurance claims. They're going down, suggesting employment is doing fine. So we'll get into that in a moment when we talk about economic indicators. But we're beginning to see brewing here a banking crisis. And the question we have to answer, is this going to become systemic like Lehman Brothers in 08 or 09? Or, and we're betting on this latter one here, is this more like 1994 when Orange County went broke and that created a crisis to which the Fed responded? We think it's much more like 1994 because the setup was similar. In 93, 94, commodity prices had taken off as we were coming out of that recession. It was an S&L induced recession, so housing. And the Fed was railing against those price increases with higher interest rates. It was a terrible year for growth stocks, and that's how we would characterize 2022. But when Orange County went bust, that was a sign that the Fed had gone too far.
To watch Cathie's full report, check out the link below. What are your thoughts on the bank crisis? Do you think this is a critical hit to the crypto industry, or was Silvergate a victim of its own errors? Let us know in the comments. If you want to see more on the world of crypto and tech, make sure to like, subscribe, and hit that notification bell as we put out daily content. Thanks for watching, and we'll see you next time.